Hello traders and welcome back to another video and another trading week. The Learn to Trade team welcomes you and well, today we're going to go on a GBP US dollar trip in the sense that what I'm going to talk about is a little bit counterintuitive in the sense that it's going to be completely against what you see on the charts. But let me go through it quite nicely and step by step so you can see my thought process on why I'm looking to go long and not short on the GBPUSD. Even though we went short on the GBPUSD with the VIP team at the breakout of this triangle formation, and we made a cool 100 pips on that. But the thing about this is that there was no follow through. There was no follow through on the move to the downside, as you can see here. And this candle right here was the candle after the monetary policy report by the Bank of England, right? That was a big bullish candle, even though the Bank of England or the round of QE or the asset purchasing program remained the same at about 875 billion or so. I don't remember the exact amount, but it's a lot of pounds being printed. And the interest rates are close to zero. They remain at 0.10%. What was bullish on that report was that they said that they were not looking for negative rates whatsoever. That was a very good news for the pound, right? And the pound rallied from the lows where we took profits all the way up to again the top of the range. This top of the range, this 137.50 level, which is and has been a heavy level of resistance, right? Now, again, if we go to the 4-hour chart, let's go to the 4-hour chart. Let's start with the 4-hour chart. You can see it. Let me just delete this. You can see that we are actually in a very strong move to the upside, right? From the lows that were printed in September 2020, late September 2020, until today, we have been in this bullish market for 139 days, and the pound has appreciated 8.50% against the US dollar. That's more than 1,000 pips at a 1,000 pip rally, right? So very strong move to the upside on the pound versus the USD. There is a lot of short or traders drop short here at this level, and I'm going to show you why, right? If we go to the 2-day chart, I go to the 2-day chart because if I went to the daily chart, I would have to zoom in too much on my charts, and I want you to look at this level. This is a big and massive level on the dailies right here. This base that held for quite a while and was broken with on April 27, 2018 is just now being retested inside of what seems to be a reversal pattern, right? This is why going long in this market at this moment in time is counterintuitive, because everything points out at a reversal, at a bearish reversal at this point, right? Because this key level hasn't been retested or hasn't been retested since it broke or since price broke with it back in April 2018. So that's about 1,000 days worth of price action. That's right, 1,018 days worth of price action that the pound was trading below the 137 or 138 level against the US dollar. So yes, this is a massive level where sellers are placed. And if we go back to the 4-hour chart right here, you can see clearly the night. You can see clearly that sellers are positioned here and are protecting this level. But the thing about this is that even though this white bullish structure looks like a reversal pattern, if we go to the let's go to the daily chart, right? If we go to the daily chart, If we go to the daily chart, so I was saying on the daily chart, right, you can see that these two highs are a very strong level or a key level too, right? So we are trapped inside of this zone. This is the no trade zone, right? I'm not going to write it down. You understand why this no trade zone. We are trapped between two key levels and price is chopping or trading between them in a choppy manner, right? This level is quite important because of how strong sellers were positioned here. And once price move up, this is the level that buyers are positioned in. You can see it here, you can see it here, and here, right? Every time sellers push price down to the 135 level, boom, buyers jumped in. And again, right? So this this pattern that traders are trapped in short because they cannot wait for the actual pattern to break, right? That's why we use stop orders. Is in fact a flat triangle, or has converted in a flat triangle, which is a continuation pattern. So we are going to go long on the breakout of this formation. And the reason that I want to do that is because of let me show you the 2-day chart again. The next key level to the upside should be these highs, and just have a look at the potential of a long position here. We're talking about a possible 600 pip move to the upside at a breakout, and if you are really conservative with your stop losses, you could get in a 1 to 2 risk to reward scenario on that. Now that is the analysis, or my analysis on the pound versus US dollar. I hope that makes sense to everybody. And I will be sending this signal to my VIPs. So if you want that swing trade signal, there's a link below this video where you can go ahead and subscribe for only $50 per £50 per month.